When it comes to LASIK, you don't have to save up for years or put off going on vacation just to pay for it. At the LASIK Vision Institute, we make LASIK more affordable by partnering with most vision insurance plans, Cigna, VSP, iMed, and more. They provide exclusive discounts to their members that you can use here at the LASIK Vision Institute. So visit mylvioffer.com and save hundreds on LASIK when you use your vision insurance. The LASIK Vision Institute. Amazing vision, amazing price.
And good evening. We are doing it live right here, weeknights in the 5 o'clock hour. Mottek On Money, 5 nights a week for you, live on the air here in 790 KBC, streaming live online worldwide at kbc.com and the on-demand Mottek On Money podcast at kbc.com, Apple, iTunes, and all your favorite podcast platforms. Well, stocks continue on a roll. We've just seen the market rack up the longest winning streak in 2 years. The price of oil pulling back. Investors also taking in the latest comments from Fed policymakers today. The Dow managed a closing gain of 57 points. Longest winning streak for the Dow since July of this year, when it rose for 13 straight trading days, coming off the best week of the year for the major stock market averages. And looks like we're off and running this week. The S&P 500 up another 12 points today. And the NASDAQ moving up 121 points. Both the S&P 500 and NASDAQ seeing their longest winning streaks since November of 2021. The bounce for equities coming after a 3-month pullback that saw the S&P 500 and the NASDAQ slip into correction territory. That is a drop of at least 10% from the most recent high. We're watching bond yields, too. The yield in the 10-year note, which hit a 16-year high, about 5% last month, briefly fell below 4.5% Friday after the jobs report came out. And after a bounce Monday, it was up around 4.57%. That's the one that impacts the fixed-rate mortgage rates out there, which have been hovering at 23-year highs. The price of oil pulling back today, with the price of crude in New York back below $80 a barrel to trade at its weakest level seen since August. China reporting raised demand concerns, and lower oil prices could help ease inflation worries, according to oil industry analysts we've been talking to. WeWork's bankruptcy, the latest blow to the battered office sector, but the outlook for the economy and interest rates are far more important in driving the stocks, according to real estate analysts. The office sharing company WeWork filed for protection from creditors under Chapter 11. The company, once valued at $47 billion, was hit by a combination of the work-from-home trend that came out, of course, during the pandemic, and pressure on the company's finances from higher interest rates. We're watching what's happening in the space sector here in Southern California with commercial spaceflight operator Virgin Galactic Holdings, based in Mojave, says it'll be cutting staff and costs outside of its Delta spacecraft program, which it expects to bring lower costs and more profit. Management, in an email to employees today, did not offer specific numbers, but said it would offer more detail during its third-quarter earnings call coming up tomorrow. Commercial spaceflight operator Virgin Galactic Holdings, based here in Southern California. We're, of course, watching what's happening in the Middle East with Prime Minister Netanyahu today saying the IDF has been reaching deeper into Gaza. And we're watching his comments today. The remarks coming a month after the Hamas terror group launched a surprise onslaught, killing some 1,400 people and injuring thousands, mostly civilians, and taking at least 240 men, women, and children back to Gaza as hostages. Israel has vowed to destroy Hamas and remove it from power in the Gaza Strip, and also has to contend with rocket fire from Lebanon and deadly attacks along its border with that country. Coming up later this hour, we'll get an update on what's happening in the commercial real estate scene in the Los Angeles area with a giant on the local business scene. Lou Horne will be with us, Los Angeles region president for CBRE, the world's largest commercial real estate services and investment firm. Lou Horne will be joining me later this hour. And one of the economic engines in Southern California, the San Gabriel Valley, celebrating business and civic leaders, among them L.A. County Supervisor KATHRYN Barger, who has just received the Public Service Award from the San Gabriel Valley Economic Partnership. Supervisor Barger will be joining me later this hour to talk business. But first, on your money, the markets, the economy, and the whole works tonight. Let's bring in money manager Ken Winans now, president of Winans Investments, market historian, author of Investment Atlas 1 and 2, Forbes magazine contributor, and longtime contributor to this program, which we do appreciate. Ken, thanks for taking the call here. Coming off the market's best week of the year, and now off to a good start this week, longest winning streak in a couple of years for tech names and the S&P 500. Give us your view of this latest rally here, first of all.
Amazingly seasonal, Frank. And, you know, we always talk about the seasonality, and I have a lot of people say, well, I don't really buy into that because it's not earnings and all that. I'm here to tell you, you can call it one of the great mysteries of the planet, but the simple fact is that November, December, January are typically phenomenally good months, even in bad market times. And I think that we're seeing that to a point. But with one cautionary note, although we're seeing the overall breadth of the market, meaning that you mentioned the tech stocks, but what I'm far more happy to see is that when we had those rallies earlier this year, they were very narrow. It was a handful of companies going up, and everything else was either sideways or going down. It's actually a cautionary tale for any of us in this business. We're seeing broad-based participation, and I'm particularly seeing it in companies like financials and healthcare, and most notably retail. And yes, Frank, you heard me say it, retail. Everybody had written them off saying they're dead, they're going to have a lousy holiday season. We're getting ready to go into the retail earnings season, and I would just encourage everybody who's listening, whether you play the stock game with ETFs or you do it with individual securities, pay very close attention as those earnings reports come out, because I actually think most of the top retailers have gotten a very tight handle on cost. They've gotten a tight handle on their inventory control. And I actually think we're going to find they're going to be better prepared for Christmas this year than they have been for the last 3 years. And I know that a lot of people, as hard as this year has been for most, people just want to celebrate. I'm finding it more and more. I was in Vegas last week, and then I was also in Philadelphia the week prior. And it's interesting when you travel, everybody is just wanting to end this year and end it with a nice celebratory note. And people are willing to get out, although they might not have the money they used to. Maybe they have a little bit more debt than they used to, but people want to get out and celebrate. So I dare say I think that what we saw kicking this year, or certainly kicking off this season in November, could continue on for the next couple of months. And I would encourage everybody who has cash on the sidelines to begin to get your target list together and look at what you want to go after.
All right, we have some news here. Looks like Vanity Fair is reporting the AI issue and the SAG-AFTRA strike might have finally been resolved. This afternoon, a report claimed that studios had adjusted the AI language in their latest offer to the Actors Union. We're at a critical point now in Hollywood with the actors strike and with the producers putting forth what they had called their last, best, and final offer. And looks like there's still some back and forth here, Ken. Obviously, this has been a very tough summer and now fall for those affected by this, with Hollywood at a standstill. But what's your read on what's happening with this and also the media names that have been impacted by all this?
Well, a lot of the media names, I know I've talked about them before, some buying opportunities. I mean, there are some major studios that obviously and have been punished because of what's happened. And again, I'm just putting on my business hat. You might want to take a good look at Icon Enterprises, Paramount Global. Many of them have their stocks are down. They have bonds. They have preferred shares. And because I am of the opinion that a lot of the delay has been just language. It's mainly legal language. And anybody who's been in business for a while knows that after you have a deal done in spirit, by the time you finally have all the lawyers involved and you're trying to figure out all the devil in the details, so to speak, it does take time. And I think you're right, Frank. It's coming to the end. I know people are hungry to move forward. I guess that's another phrase I would use. Whether you are an automotive worker in Detroit, you work in entertainment in California, you're working hospitality in Las Vegas, people are tired. They just want to move on and get past this. And I think that we're finding the rank and file and union members are saying that to their bosses. Look, let's just get a good deal and let's move forward. We don't want this going into 2024.
All right, you mentioned those tech names that led the rally. How are those Magnificent Seven stocks looking to you now?
Well, it's interesting. I mean, obviously, many of them have played well, and I was actually really pleasantly surprised to see how well Netflix has bounced back, because Netflix had been lagging badly most of this year. It finally had a nice pop. But, in saying that, I mean, yes, they're stable, but I got to tell you, Frank, I'm finding better bargains in other sectors. These stocks are still very expensive when you're looking at it from a multiple standpoint. And I'll take a good point, Apple. Apple has traded sideways for pretty much 18 months. It's gone up and down in a channel, but it's gone sideways. I'm looking at that, and then I'm looking at a breakout in something like TJX, which is a retailer, which has had a pronounced breakout. Or I look at what's going on in some of the financial stocks. I'm finding more compelling names to buy outside of the Magnificent Seven. And that's the thing. I've always said many times, I'm not a big fan of celebrity CEOs. I get worried when people have publicists when they're supposed to run companies. And I like companies where the CEOs are the top management. Most of us wouldn't even know their names. And I love people like that because it means they're focused on running their businesses and not all this other stuff. So, again, I think that we're going to see a continuing rally, but you might be surprised who the leadership is as we go through the next 90 days, and it might not necessarily be tech companies.
On there live with Ken Winans, and certainly commercial real estate very much in focus. And I'll be speaking with a giant on the local commercial real estate scene with us later this hour. But WeWork's bankruptcy, of course, getting a lot of attention. This was once a Wall Street darling, once valued at $47 billion, and went right down the tubes here. Of course, REITs were also very much in fashion, not so much anymore, or are they? Ken, are you seeing what are you seeing now in commercial real estate?
Well, here's the thing. I mean, obviously, the old adage, location, 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 but I think you also want to add to that, I mean, is it a safe area for people to walk in? Not just a nice view. Do you have a severe homeless problem in your area? Is your parking garage safe? These are things that we're going back to. And you talk about WeWork. I mean, they had a very I mean, I'm in Vegas a lot, and I have an office there. WeWork had a very pronounced presence in the Las Vegas market. But the reality of it is many of their competitors did a much better job on controlling their costs during COVID, in my opinion. And that's what happened here. Because, I mean, you can still find very nice temporary workspace at a reasonable price in a lot of the markets. But, Frank, let me talk real quick about commercial real estate. You know, like it's the white elephant in the room. We don't want to talk about it, but here's the reality. I was in Philadelphia, I just mentioned a moment ago. I had people there saying, we have such a terrible homeless problem. I comfortably walked around downtown Philadelphia at 11 o'clock at night and had no problems whatsoever. Las Vegas, I'm in Las Vegas. Vegas has made it very clear that they are going to basically make sure the tourists have a safe experience in Las Vegas. Same thing. You cannot say that about downtown Los Angeles. I'm probably going to get in trouble in saying that, but that's the truth. And until we get that under control, I think the people who own commercial real estate in some of those big centers, those big downtown centers, are going to find it very, very hard to get anybody to want to go down there, whether it's a retailer, a restaurant, or going to work. You're scared to park your car. So, again, all these major cities in California are going to have to come to grips with this, and I think that they are going to have to take a good lesson from the cities in other parts of the country who have figured out how to balance being empathetic to what's going on here, but at the same time with economic reality.
All right, we're watching the geopolitical developments very closely and what's happening in the Middle East. Of course, when Israel was attacked by the Hamas terrorists, we saw that big spike in the price of oil. It's come down now below $80 a barrel here. Ken, what's your view of what's happening there and the economic impact of how this is all playing out?
Commodities are a big gauge for me, Frank, and they always have been. In the 30-plus years I've been managing money. And the fact that oil is pulling back when you're having a major, well, actually two major wars going on with two major oil-producing regions of the world, Russia and obviously the Middle East, tells you what you need to know. I think that, and in fairness, I think the administration has done some reasonably good moves on trying to expand domestic production. There has also been talk that we have opened up better channels of communication with the Canadians and certainly with countries in South America that have oil. So I think that we're getting smart about it. But also, it's not just oil. There's a lot of commodities that had been on a 2-year run, and one that was most notable, and anybody who happens to like red meat will know what I'm talking about, how thin our cuts of meat have been getting at the grocery store when we go to buy steak or pork. Cattle prices are suddenly dropping, and they're dropping in a pronounced way. I think that we're going to have a pleasant surprise going into 2024. It doesn't necessarily mean it's going to translate itself to the grocery store real quick, but at least a lot of the upward pricing in raw material costs is coming down. That's the good news. The bad news, if we have a whole bunch of strikes going into 2024 where you're having wages go up, whether it's public sector or private sector, that can dampen.
Get an inside look at Hollywood with Michael Rosenbaum.
Let's get into the fascinating, wonderful Bonnie Wright.
Oh, yeah. Ray Fiennes was the most chilling actor to work around.
He wasn't funny and making jokes.
No. A little bit, but in, like, Voldemort way.
Did you feel like he got very little direction? They let him do what he was just doing?
I'm sure he was probably the type of actor that would go kind of quietly and speak to the director rather than
What am I doing wrong? What do you want me to do?
Inside of You with Michael Rosenbaum, wherever you listen.
In the economy. But I think that a lot of the commodity pressure is beginning to subside, and that's obviously good news for anybody who's an investor going into next year.
All right, yes, so inflation, of course, everybody's talking about it, but you mentioned they're calling it shrinkflation, where you're seeing smaller everything for the same price or higher. That's what we're seeing at the grocery store and certainly in the restaurants where prices have doubled in some cases, Ken. What about on the inflation front? Is the worst over, or are we still going to be struggling here?
This is where it gets tough. The best analogy I can give the audience, I see inflation like I see rust on steel, whether it's a car frame or whatever we may look at. Once it gets on it, it's awfully hard to get out of it. You're trying to scrub it away, put chemicals on it to get it off. It keeps coming back if you don't stay on top of it. So unfortunately, the bad news is that we're not going to go back to a 1% inflation world anytime in the near future. Even Jay Powell said his best case scenario is by the end of 2025. And I think he's actually being kind in saying that. That's the bad news. The good news is that now that we have raised interest rates, we don't like it, but they're basically where they really should be right now based on where we are in the economic cycle. I don't think inflation is going to spike. We'll have periodic phases where things might spike up because of the driving season in the summer, or naturally, if we have a real cold winter, we might see natural gas prices get a little high, but it's temporary. So I think that we're learning to live with an inflation world between 4% and 2%. And I think as long as it stays within that band, we'll see economic growth move forward. But I do think, the one cautionary tale I keep saying, what killed everybody off in the 70s was you had the initial surge in prices from commodities, and the last half of that decade was the surge in wages. And you got to be careful, because that surge in wages means that the employers are going to pass those costs on to their consumers, and it just becomes a vicious cycle, and you don't have anything go down. So as long as we don't have that, I actually think we've cleared a lot of hurdles that will allow us to at least have a decent economic situation going into 2024, 2025. Let me say one other quick thing, though. We don't count it in inflation, but it's very important. Taxes. If they're not counting the economic data. But if we're looking at a slate of new taxes next year at various levels of government, federal, state, and local, to help offset the large cost of servicing their debt they've taken on for the last 20 years, that could be a massive dampening in the economy. So voters need to make sure that they tell their elected officials, you guys better not plan to hammer us with a bunch of new taxes.
All right, speaking of getting hammered, consumers enjoying the highest credit card interest rates ever seen. We did hear from the Minneapolis Fed President Neil Kashkari, a former gubernatorial candidate here in California. He said Fed officials have not discussed what it would take to cut interest rates at this point. We also heard from the Fed Governor Christopher Waller today, calling the jump in the 10-year yield an earthquake in the central banking terms, and a slowdown in job creation last month. Welcome news, because it brought the labor market into a more balanced and sustainable growth, according to the Chicago Fed President Austin Goolsbee in an interview today. What do you think the Fed's next move will be, and are they done raising rates at this point?
The Fed has found themselves in a very tough situation, but I have to tell you that I actually think they have truly studied what went wrong in the past with bad Fed policy, and clearly they've made amends with some of the terrible decisions they made after COVID. Here's the deal. The Federal Reserve does not want to sway elections in any way, shape, or form. That's been a long-standing policy of the Federal Reserve, because technically they are an independent body, and they do not want the ire of Congress hammering them if they are seen at all of affecting an election. So I actually think unless we have something really wacky happen, they're going to stay clear of raising rates going into next year. Now, people are asking, what would it take for them to drop rates? Here's where it gets tough. A dropping of interest rates means that we're having terrible economic problems, and I think we want to be very cautious on that. I think what we want right now is stability in interest rates. That means that people looking at mortgages can just kind of warm up to what the current rate is. By the way, one of the other positive groups that took off in the last week, and it was a bit of a shock to me, were home builders. And I believe the reason they took off is for what I just said. When you have stability in interest rates and you've taken the guesswork out of it, everybody can learn to live with it and can figure out how to price new homes, how to provide financing for these buyers. It allows stability. And I think that's the number one thing we'll see going into 2024. But as I said, if we see the Fed suddenly dropping rates dramatically, we're not going to like that economic picture.
All right, Ken, we'll have to stop there. Thank you very much for that thorough assessment, as always. That is Money Manager Ken WINANS, president of WINANS Investments, author of Investment Atlas 1 and 2, and Forbes Magazine contributor. Ken, thank you very much. Have a great evening. Hope to talk to you again very soon.
Thanks, Frank. Good night.
Good night. And let's go right out to the freeways now here on 790 KABC.
KDBC Dependable Traffic, sponsored by Wendy's Breakfast, 2 for $3 Biggie Bundles. Orange, the 55 northbound after Catella Avenue. Accident has the left lane blocked. South LA, the 110 southbound before Adams. Disabled vehicle, right lane blocked. Wendy's new breakfast, 2 for $3 Biggie Bundles, lets you choose from your fave 4, including a sausage or egg and cheese biscuit, small seasoned potatoes, or medium hot coffee. Limited time only during breakfast hours. U.S. price and participation may vary. Not valid in a combo single item at regular price. That's Dependable Traffic. I'm Kevin Tripp on AM 790 KABC.
People like you and me have our ear to the ground on all things business. We like to be informed and well prepared, and as important as finance is, I want to make sure you have a plan in case you're hit by someone not paying attention to the road. Thinking ahead serves us well, and even still, we can still get caught off guard as people are so focused on their destination that they might not have a plan if they're in an accident that's not their fault. And that's why I encourage you to put my friend, Attorney Clark Fielding's number in your phone right now. That number is 833-88-SHARK. So if you're hurt in an accident, you'll be ready with your strategy to make Clark Fielding your first call. Fielding Law aims for the highest possible settlements, considering you might need long-term care, rehab, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of an accident, call for a free consultation with Fielding Law. You can trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Motorcycle, truck, pedestrian, scooter, hit and run, boating, or bicycle accidents, you name it. Call 833-88-SHARK. That's 833-88-SHARK, or go to clarkthesharklaw.com.
Worked hard all your life and fought for every penny, and now you're looking for a bigger, better retirement, right? You deserve safety, security, and someone you can trust. Does a 9 to 11% possible annual return sound right for you? What if you could have a secure investment that's not affected by inflation, interest rates, bank collapses, or market crashes? With agents having more than 30 years' experience in this sector, 1850 Financial can help. They could deliver an annual 9 to 11% return with no market risk, and most IRAs and 401ks are eligible. With 1850 Financial, expect a secure investment without exposing your principal to market risk. So if the market crashes, your money is never at risk. Again, most IRAs and 401ks are eligible. Thousands of people have found financial security and stability using this proven strategy. To take advantage of this opportunity where you could earn a 9 to 11% annual return and to see if you qualify, call 1850 Financial at 844-703-0000. That's 844-703. On the local business scene, Lou Horne, the president of the Greater Los Angeles, Orange County, and Inland Empire region for CBRE, the world's largest commercial real estate company. Lou Horne, thank you very much for joining us in downtown Los Angeles for this important update here. And give us your view of things, given that commercial real estate is certainly top of mind nowadays.
Thank you, Frank, and thank you for having me on your program. I would say right now we are coming out of a dark winter from COVID still. I mean, we've initially with COVID, we saw a big change in hospitality, a big change in retail. We're severely impacted, and those have pretty much recovered. The industrial marketplace had actually improved, and we've seen some of the best improvement in industrial values leasing over the last 3 years that we've seen since I've been in the business. And then office really wasn't hurt, but I would say in the last 9 months, we've seen a fairly material impact in the office business, primarily because of the lack of demand, because people in the Southern California marketplace and across the U.S. really have been slow to return to work, which has impacted demand, which is impacting the lending community. And so right now, the lending community has had some serious impact on the way that deals are structured in the office business.
What's happening specifically in downtown Los Angeles? How is this slow return to the office impacting things specifically here in downtown LA?
I think occupiers are
Welcome to Talkville, the ultimate Smallville rewatch podcast. I always drove the cars, the Porsche, Ferrari, Lamborghinis. They were always a little skeptical, but sometimes they go, all right, Rosie, just go up where the stop sign is and turn the car around, and we'll give you your cue on the walkie. And I go, great. And they're like, Rosie? I'm like, yeah, dude. Oh, yeah, this stop sign? They're like, yes, there's only that stop. Oh, okay.
Jump in now or catch up on any of the past seasons of Talkville on YouTube or wherever you listen.
Focused on now are areas where there's amenities, where there's a closeness to home, and also where they feel safe and secure, and that there's an environment which attracts and retains talent. So I'll use two markets really as juxtaposition, and that would be the Century City marketplace, which is probably one of the best office markets in the United States right now. And then the downtown Los Angeles market, which is really struggling to attract and retain talent back into the office buildings. We're seeing a significant change in the lending as well. Buildings right now that have a loan due, in most cases, are being requested by those lenders to add additional equity. In many cases, they're not able to do that, so we're starting to see a lot of restructuring of office buildings in downtown Los Angeles. Almost half the skyline, actually, Frank.
Isn't that something? What about ULA, which was just upheld by a judge here in Los Angeles? This is the so-called mansion tax that was passed last November by voters in Los Angeles, but it's not only impacted high-end residential properties, but certainly commercial real estate. And you've spoken out about this. Now that the judge has ruled, where do things go from here?
Well, I'm not sure the next steps. I know that there's a potential to put something back on a ballot, but I just think by the nature of your comment about calling this a mansion tax, that's what it was advertised as, and I think that was very misleading. I don't think anybody would disagree with that. The focus on that initiative or that vote was really around homes that were over $5 million. The truth is, all in, it's a 6% transfer tax. So the unanticipated consequence is the impact on new development and also the impact on troubled assets. So is it really fair that a building that may be reverting back to the bank, where the equity's been lost, any of the debt that is in second or third positions on those properties has been lost, now is handed a 6% of the gross value tax? Don't feel like that's fair. Don't feel like that was the intention of the bill. Certainly, I've been one of the biggest advocates to try to find solutions around homelessness and housing. And if the impact of that transfer tax was focusing on additional housing, I think there are a lot of other ways for us to accomplish those kinds of goals.
Is there a serious look at office buildings that are not used as much these days and convert them to residential? Is that something we're going to see more of now?
Well, it's a little more complicated. I mean, the knee-jerk reaction to office to residential conversion sounds logical because we have a lot of office buildings right now that are high in vacancy. However, it depends on a lot of factors. The first factor would be just the dimensions of those floor plates in those high-rise office buildings. If there's not the appropriate dimension, then it's very difficult to create livable residential units just because of the kind of venting, the kind of exterior work that needs to be done to these offices. It just makes that very problematic. There are potential opportunities, generally on buildings that are built prior to 1970, where they are on the lower side, lower high-rise side, and we are seeing some conversions. But overall, it's between a 7 and 10% potential out there, and those price points have got to be so low so that the developer can afford to be able to put in all the MEP, all of the exterior opening windows, all of the right amenities that can make that conversion. So in theory, it sounds great. In practice, it's very difficult.
Among the bright spots, certainly in recent years, has been industrial real estate with the rise of e-commerce. And what about e-commerce and industrial real estate these days?
Well, as you saw, Frank, over the last 3 years, we've seen the biggest increases in industrial demand. And a lot of the industrial demand has been not just in the outlying areas and areas that are focused on e-commerce, that are logistics-oriented out in the Inland Empire, but we're also seeing quite a bit of a development out at the Tejon area, up in the Lancaster-Palmdale area, and certainly further east out into the Inland Empire. The truth is, e-commerce really made a massive impact on industrial values. We saw big increases in industrial land, industrial building, industrial leasing, industrial sales. We've seen a little bit of pullback on industrial recently, primarily because of the interest rate changes. It's just, and also just the cautiousness around a potential recession. Now, I think in most cases, once the interest rates are adjusted back to what our new normal will ultimately look like, I think we'll ultimately see industrial stabilize. It's definitely off right now a little bit, but we see that snapping back fairly quickly.
And give us your view of the overall economy, zooming out to the big picture now among the movers and shakers you interact with here in downtown Los Angeles. Where are things going from here?
Well, I think that, we've been talking about this recession for quite a long time. I think the interest rates have made a massive impact on our business. When you're borrowing at rates now that are 3 times what we were seeing in the past, it has an immediate impact on investment activity. It has an immediate impact on development activity. It just slows the entire commercial real estate business down. And I think what we really need to see is just a stabilization so there's certainty. Developers, investors like certainty. So once we see more of a stabilization of the economy and interest rates settle in at whatever they're going to be, those adjustments will be made, and I think a lot of our sectors will return. Now, that said, I think those are all cyclical discussions around retail, industrial, multifamily, and other investment. In the office sector, I think it's really more than just a cyclical factor. I mean, structurally, we're looking here, more so here in the U.S. than we are in Europe and also in Asia, but this return to work issue is still not settled. Clients, companies are still very uncertain about what are their policies. And I think until we really settle that out and find some new normal about how people work and when they go back into the office to benefit from the serendipity of running into each other and mentorship and all of those things that go along with office community, I think the office sector is going to be impacted for quite some time.
What would you like to see happen here to improve the overall business climate here in downtown Los Angeles? Obviously, with the homelessness and crime being big issues, what would you like to see happen to turn things around here?
First of all, perceptions are reality with most people. And I think the idea of creating an environment where there's a single narrative of what's really happening on the ground has got to be important. And we've been working with our elected officials. We reorganized a lot of my team and included, in fact, a new leader, Jessica Lull, who has come in and helping us build close relationships with our elected officials so that we can deliver one narrative that really is describing the facts of what's happening in a local environment. The perceptions of downtown are that it's not safe. And I think there's some truth to that, but the truth is it's not as bad as people say it is. And I say that when we witnessed the ULI conference that was here last week, 5,000 people who visited our community in downtown LA all across the country. And these were lenders and CEOs of real estate organizations, developers, who all walked away from that experience feeling like it was not nearly as bad as they had read. So I do think that we need to create an environment and a narrative which describes truthfully what's going on here. Now, I also think, though, that said, we've got to solve this problem around homelessness. We've got to solve the problem around crime. If every one of those stories comes out, and when that comes out, it helps that narrative and it drives people's behavior. And that means you're going to start to see a flight to different areas where people feel more secure and safe.
Lou Horne, thank you very much for that comprehensive update on what's happening on the commercial real estate scene and business here in Los Angeles. That is Lou Horne, the president of CBRE for Southern California, Greater Los Angeles, Orange County, and the Inland Empire. Looking forward to many more updates from you, Lou Horne. Thank you very much for joining us here on Mottek on Money on 790 KBC.
Thank you, Frank. I appreciate what you do for our community. I think you're a driving force, and we really appreciate your input and just your leadership in making sure that we really are talking about the true facts as they are. Thank you, Frank.
Good evening. Mottek on Money continues here on 790 KBC. Business and civic leaders in the San Gabriel Valley were honored over the weekend by the San Gabriel Valley Economic Partnership. Among the honorees, LA County Supervisor KATHRYN BARGER, who received the Public Service Award for her work promoting business in LA County, as well as working on the homeless issue and also helping veterans and foster kids. Supervisor Barger, congratulations, and thank you very much for joining us here. Give us your reaction, first of all, to this latest honor.
Well, I'm humbled. I mean, to get an award acknowledging the fact that I'm working with a group that wants to get things done, it's an honor. And I can't think of a better organization that's really about collaboration. And with all the challenges going on in this county, the San Gabriel Valley Economic Partnership has really been vital as it relates to making things happen. That's what people want.
Fantastic, and we've seen a lot happening here. Last time I spoke with you was at the dedication of the newest Gold Line, or now K-Line, I guess, train station. A lot happening here in the San Gabriel Valley. Tell us how you see things here.
I'm optimistic. I'm excited about the opportunities we have before us. There's no question. A lot of my cities are here tonight, and we're working on addressing the homelessness crisis throughout the 5th District. And I'm optimistic. I'm optimistic for the jobs that are going to be created. I'm optimistic that we're going to bring down the cost of housing. We're going to get people into shelter. And I think the future is bright.
All right, we just got the latest jobs report recently. What do you see happening on the jobs front here?
You know, I follow it very closely, and I know in my district, disproportionately hit very hard during COVID. But we are seeing an uptick. We're seeing an uptick, especially up in the North County. I was up there this week, and up in the Antelope Valley, Lockheed and Northrop Grumman are getting new contracts and are hiring. And their problem is finding people now. So if anyone wants to get a good job, well-paying job, head up to the North County.
And certainly here at the reception and at this event, you're obviously loved by the business community. What's it going to take to make LA County even more business-friendly?
Have government get out of the way. I think that the reality is that government can't, nor should they, fix everything. And we should be working in cooperation with, because at the end of the day, that is the grease on the wheels of the county. Small business, medium business, large business, and we need to be business-friendly across the board.
And what's going on as the holidays approach now and the colder weather approaches? Saw that report about masks being required again in some places or recommended. What's your outlook for what do you see ahead here?
I will not support a mandate. If people are in confined areas during the holidays and they choose to wear a mask, that's their choice. But we are not going to go back to the days of mandates. That train literally has left the station.
All right. And before I lose my thought of train, what about what's happening here with the economy overall? Any new projects or anything else that you're pushing at this time, especially as it relates to affordable housing or anything else that you'd like to mention here?
Yeah, I was up, as I said, in the Antelope Valley. We're looking at doing a center of excellence, which is going to bring manufacturing jobs up to the Antelope Valley. And with that will come housing. Biggest issue right now is going to be the interest rates and getting developers that want to invest in LA County and can find the capital to do it. So we're going to be working collaboratively with both the state and the federal government to see what opportunities we can put on the table so that we can entice people to continue to invest in housing here.
All right. And what about safety and security and the crime issue, which continues to weigh heavily on people's minds here, especially as it relates to transit, by the way? What are you doing to turn things around on that front?
Law enforcement, law enforcement, and law enforcement. At the end of the day, we need to support law enforcement. We need to have the laws enforced. So we need a DA that's willing to stand tall and do what's right. And on our transit system, obviously, again, having both the ambassadors, but with law enforcement. When I talk to the ambassadors, they say the only way they can do their job is if they have law enforcement with them.
And you're also being recognized here for your support for veterans and foster children, which often don't get a lot of attention. Tell us about your work in those areas.
I have an incredible staff who is a veteran, Roberto Alvarez, and we put together a peer peer group, and we're doing a lot of outreach for the homeless, working with veterans, and we're making sure in my East San Gabriel Valley office we have someone come out from the VA and from the county that lets veterans know what they have available to them, which many don't know all the benefits that they have. So I'm really proud of that. And then on the foster front, we need to ensure that those that are transitioning out of our system have what they need to succeed, because they don't have the safety net. We are their safety net. So transitional housing, education, jobs.
And what is your message to the San Gabriel Valley Economic Partnership here?
I'm so humbled and grateful to receive this award. I cannot thank them enough. There are many who are as deserving, and I don't take it lightly, and I will truly cherish the award tonight and also the memories of this evening.
The Honorable KATHRYN Barger, L.A. County Supervisor, receiving the Public Service Award from the San Gabriel Valley Economic Partnership in San Gabriel. Thank you very much for joining us here on Mottek On Money on 790 KBC.
Thank you.
And now stay tuned for the 790 KBC News Blitz with Royal Oaks. This is Mottek On Money on 790 KBC.
Get an inside look at Hollywood with Michael Rosenbaum.
Let's get into the fascinating, wonderful Bonnie Wright.
Oh, yeah. Ray Fiennes was the most chilling actor to work around.
He wasn't funny and making jokes.
No. A little bit, but in, Voldemort way.
Did you feel like he got very little direction? They let him do what he was just doing?
I'm sure he was probably the type of actor that would go kind of quietly and speak to the director rather than
what am I doing wrong? What do you want me to do?
Inside of You with Michael Rosenbaum. Wherever you listen.